Today we will discuss investment company, its role as an indirect investment, and this discussion will help our students enrolled in money and capital market subject. Investment company is engaged in the business of pooling money resources and investing pooled capital in financial markets. This company may be known as a fund sponsor or fund company. Further, capital can be pooled through either a closed-end fund or an open-end fund. Investment company, investment management company, and asset management company are used as synonym. In Pakistan, investment company and investment advisors rule 1971 used to regulate closed-end fund, and asset management company rules 1995 used to regulate open-end fund. In 2003, non-banking finance companies rules were promulgated, and both of these rules of 1971 for the closed-end fund and 1995 for the open-end fund were replaced. So presently, non-banking finance companies rules 2003 and non-banking finance company rules and notified entities 2008 regulate both the investment company as well as the asset management companies. Once the company is registered either as an investment company or asset management company and gets a license, then they are eligible to pool capital further from the public. If the company is registered and got license as an investment company, so they can launch closed-end fund. And by launching the closed-end fund, they will have to first take care of investment advisor and custodian of the securities. So once this arrangement is made, the closed-end fund can issue IPO. And this IPO is issued in the same way as a public limited company issue its IPO, and same procedure is followed for the initial public offering. In case of closed-end fund, they have the fixed capital like any public limited company, and once the shares are issued, they are not redeemed by the closed-end fund itself. They are traded on the stock exchange unless the company wind up its business. Whereas when the company is registered and licensed as asset management company, they can issue open-end fund. Before launching this fund, they will have to appoint trustee and custodian. Trustee will take care of the investor's interest, that whether the asset manager is following the objectives of the fund, and the custodian will hold the securities, means take care of the securities. In case of open-end fund, it's a continuous process of buying and selling of the certificates of open-end fund, and there is no fixed capital limit. That's why we say that the capital of open-end fund increases and decreases as the time passes. They have the branches and outlets where the investors can approach and they can buy and sell their certificates of the fund. Value of the certificates is determined based on the net asset value of the portfolio, and this is determined based on the market value of the portfolio securities. So this is the way that how the open-end fund operates. If we look at the history of mutual funds, so we can trace it back from 1774 when a Dutch merchant, Adrian Katwijk, introduced a concept of diversification of investment. And he introduced a trust named as Unity Creates Strength. Time passed, economies developed, and mutual funds growth continued. And if we now look at by the end of 2022, the global net worth of the mutual fund industry, it is $66.3 trillion US dollars, according to the Yahoo Finance data. And it is expected that it will grow to 191 trillion US dollars by the end of 2032. USA mutual fund industry is one of the top leading industries, and European mutual fund industry is the second in layer. If we look at the net worth of the USA mutual fund industry is 22.1 trillion US dollars. And there are 7,373 mutual funds by the end of 2022. Whereas the total market capitalization of the US industry is 40 trillion US dollars. So if we look at the ratio, the percentage of the mutual fund industry net worth as a percentage of the total market capitalization is 55%, means 22.1 trillion as compared to the 40 trillion is around 55%. Whereas if we take the percentage of the net asset value of the mutual fund industry as compared to the GDP, it is 88%, whereas the GDP is 25 trillion US dollars. So if we divide 22 divided by 25, so it is around 88%. Now let us look at the mutual fund industry of Pakistan. Mutual funds were introduced in Pakistan in 1962 when the first mutual fund was launched in the public sector named as National Investment Unit Trust. Then in 1971, permission was granted to the private sector to come forward for the launching of the closed-end fund, but they were restricted to launch open-end fund. In 1990, again government permitted private sector to come forward and even they can launch open-end funds too. So presently there are 313 mutual funds and there are 21 asset management companies. If we look at the net asset value of these mutual funds in Pakistan, it is 1.26 trillion rupees, and in terms of dollar it comes to 6 billion US dollars by the end of 2022. And if we take a percentage of this net asset value as compared to the market capitalization, where the market capitalization is 7.75 trillion rupees and it is around 38 billion US dollars. So if we divide 6 billion US dollars to 38 billion US dollars, so it is around 16%. And if we take this percentage of net asset value of the mutual fund industry to the GDP, so it is around 1%. So if we compare these figures of the Pakistan mutual fund industry with the world leading mutual fund industry, so we are far behind. So the purpose of this comparison was that where do Pakistan mutual fund industry stands as compared to the leading mutual fund industry or the top mutual fund industry. So we are far behind in the mutual fund growth or progress. There is a tremendous opportunity available in Pakistan mutual fund industry to grow. The reasons behind are that mutual fund on the one side channelize savings to the financial market, and on the other side it provides a diversified portfolio to the individual investors and the household investors so that they can minimize their risk in the financial market or in the capital market. Mutual funds are important for the individual investors because when the individual investors invest directly in the market, so they are more prone to risk, and when they invest through mutual funds, so they are actually investing indirectly to the capital market. So it provides liquidity to the capital market on the one hand, and on the other hand it provides an opportunity to minimize risk of the household investors as well as to the individual investors. So presently in the capital market we have 220,000 individual investors. So you can make a comparison of 220,000 individual investors with the 250 million population country. So it is even less than 1%. So the reason behind is that the individual investors have a more risk in the capital market. So when they will be investing through mutual funds, so they will have more opportunity to diversify away their risk, and they will be at least getting a profit from the market. So there are a number of topics which we can discuss in this context, like pension funds, like real estate funds. So all these type of funds, because they follow different rules, so sometimes later we will be sharing information about those topics. Thank you very much.